Good morning, everyone. Welcome to Daily Rates Live with the Mortgage Calculator. Today we are going to be going through our live mortgage rates, and then we're going to be doing a deep dive into USDA loans. Give us just a moment here to go live on all the different platforms. You can go ahead and drop a comment there in the chat as you tune in. Appreciate it. And we'll get started here in just a moment. Great topic here to go over today. Some of the basics, but also might be a couple things that you may not know about USDA loans that we'll go over here. But let's go ahead and get it going. Looks like we are live on all the different platforms, so we'll go ahead and get it started. Again, go ahead and dropping comments there in the chat. What we'll do is we'll take the chat off the screen for now, but you can drop any comments and questions you have in the chat as well. So welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our chief sales officer, Jose Gonzalez. We are a lender that specializes in non-QM loans, and what we do every weekday at 11 a.m. Eastern on this show is go through our actual live mortgage rates for some different programs. Then we do a deep dive into a different loan type. Today's loan type is going to be USDA loans. So great, always a great topic to go over, and I'm sure Jose has some cool stuff up his sleeve. So we'll go over that here shortly, but before that, we'll pull up our rates for some other programs. So Nick, if you're ready, let's go ahead and pull up today's live rates and see what they are looking like.
All righty. So a lot of news, but not much activity right now. Rates are pretty much the same, and we will compare across all our programs. It is August 13th, just after 11 a.m. Eastern, so all our standard programs have their initial rates for the morning here. If you'd like a full breakdown, an itemized loan estimate that breaks down all the fees that go into the APR, please get with our team members. We have over 300 loan officers to help you out. For the demo today, as we do every day, we'll set up a standard scenario so we can compare that APR across the programs. We'll set up a single family home, a $500,000 purchase price, $400,000 loan amount. That corresponds to 20% down payment. And we'll set a estimated 760 FICO credit score and an estimated 40% debt to income ratio. So with those settings, let's check out the rates for today. So first option, we always want to check out the most common option that people think of when they think of a mortgage, 30-year fixed conventional primary. Rates today come in at 6.125, final APR 6.44. Not much change since yesterday. Now, if for any reason our customer doesn't qualify for a conventional option, usually we'll want to present an FHA option. FHA allows more leniency on credit issues as well as a higher overall debt to income ratio, but it does require upfront and yearly mortgage insurance. Rates come in today, 5.25 with all of the fees and mortgage insurance, 6.205 APR there. So notice if our customer qualifies for both, they may consider the FHA if they're willing to do the mortgage insurance. And our customers that need to use it, it's definitely very comparable here in cost. For our vets, we did an episode on all of the cool options yesterday. Check that out. But for our standard options for our eligible vets and active service members for a VA loan, rates today come in at 5.625 and with a standard funding fee, APR 5.903. So our customers that qualify for their VA benefits definitely want to take advantage, as when we compare across the programs, the VA is going to be the best benefit for those borrowers. And the final standard option here for agency government programs, USDA. USDA is only in USDA eligible areas, the rural areas of the country. If the customer is eligible and the property is eligible, it's a good option to consider. Rates as low as 5.5. Final APR with all the fees, 6.242. Right now, when our customer compares that to FHA, FHA could be a touch cheaper. Usually USDA is a touch cheaper, and it is cheaper than conventional. So our customers looking in those areas, definitely consider USDA options. And that rounds out the options that any bank or lender has. But if our customer doesn't qualify, unfortunately, other banks or lenders have to deny them. But we have thousands of other options here. First up, our non-QM options for a primary home using alt docs. So if our customer doesn't qualify using conventional tax returns, etc., needs to switch to alternative documentation, we have options for bank statements, 1099s, P&Ls, all kinds of different options. This option here for the lowest rates, typically a bank statement option, coming in at 6.75 today. Final APR, 7.067. So when we compare across conventional, our customer needs to switch. We're within about a half a point, a little more than a half a point here to switch to using alternative docs. So very reasonable cost to get that home they still want to get. And tons of options and flexibility for investors. First up are non-QM alt doc options for investors. Again, bank statement are similar, coming in at 7.125, final APR 7.479. And we'll compare that to our conventional options. Remember, there are no government programs, so no VA, USDA, or FHA, but we do have our conventional for investment properties coming in at 6.875 today. Final APR 7.211, which is a touch cheaper than our alt doc option when we compare those. But we always recommend our investors check out our favorite option, the DSCR options. DSCR stands for debt service coverage ratio. No income needed, no employment needed for these loans. Simply use the estimated rents from the appraisal to determine a DSCR ratio. If the estimated rents can cover the expenses, aka the property will cash flow monthly, that's a ratio of 1 or higher, which is preferred. For these demos, we use a ratio of 1.5, which is the highest, so we can see all the programs. First up is our 3-year prepayment penalty option, rates as low as 6.625, final APR 6.951, which is lower than conventional, absolutely amazing. And we can add a 5-year prepay to sweeten the deal a little bit more, rates as low as 6.5, final APR 6.810, to get a little better rate option there as well. And the final option is a no prepayment penalty option, which some states don't allow, some investors don't want, no problem. We have rates as low as 7.125, final APR 7.479. So you see it's a touch higher than conventional, but I'd still say 100% of investors would choose a DSCR when we're within 0.25 thereabout of the cost. And the final two options here, second mortgages, very popular request. HELOCs are definitely popular these days, but they're very expensive. HELOCs are variable rate and a much higher rate than we have here we can offer on our 30-year fixed second mortgages. So customers that don't want to touch their first mortgage, instead of a HELOC, can get a 30-year fixed second mortgage for a primary home. Rates as low as 8.5, final APR 8.944. Much better than a HELOC option and not variable. This is fixed. And these are non-QM, so you can use bank statements and similar. And our investors can use the same program, can get cash out of an investment property, 9.875 rate, final APR 10.093. And HELOCs are very rare for investors, so that's a great option there. Let's get into our topic for today, where Jose is going to break down USDA loans. So another loan type where we can't really push the limits on the live demo when we're trying to compare everything apples to apples here. But USDA, just like yesterday's topic, VA, definitely a unique government program that allows us to push all kinds of different features and LTV limits. So I'm sure Jose will show all the different ways we can make the USDA options work for our borrowers. So what do we have today, Jose?
Good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator. Today, we're covering USDA loans, right? These are a subsection of loans that are meant to serve basically our agricultural community, which tends to have, in some cases, a little bit lower income, may have some credit issues. So we definitely want to support the people that help feed us. Hence, the USDA program is the solution for that. 100% financing, reduced MI when compared to conventional loans, and definitely more relaxed credit guidelines and income also when compared to your standard conventional loans. And the big issue that's being resolved here is that also it is set up to service rural area properties. You all know that can be a challenge when doing your agency loans. Definitely a challenge when originating non-QM loans. So if you have your full doc borrower and you think it's in a rural type area, run the address through the USDA geocoder. And if the property is accepted, then definitely and it's full doc, obviously, I would definitely go with the USDA. 100% LTV financing is also a big added plus. So let's get right into our options today. One thing I did want to mention about USDA loans, it is geared to assist for home ownership purposes, right? So there are not any cash out refis ever applicable for USDA. and it is also only for 1-unit properties. No 2 to 4 unit house hacking here or anywhere actually with USDA loans. So our first example here is at our maximum uh, credit tier, right, for a preferred borrower. And you're looking at 6.25 with a lender credit of 0.5 as our lowest cost option. That's always pretty cool. 100% financing, 6.25 rate, and you get $2,500 towards your closing costs, right? That is amazing. And you can buy that down all the way to 5.375 rate for only 2.375 points. So you can definitely see the benefits here regarding pricing for USDA, where they're definitely trying to help our borrowers. And USDA and manufactured homes are a match made in heaven, as they like to say. Uh, Manufactured homes are pretty prevalent in those rural type areas. So USDA is definitely the way to go with these. 6.25 is our lowest cost option at par. And you can buy that down all the way to 5.625 at a cost of 2.375. So you do see a little bit of a loan level price adjustment there for using for the property type being manufactured home. Now, here is our low credit score option, right? USDA does not have a minimum credit score. However, uh, the investors do add overlays. In this case, we're talking about a no overlay option here, where we can actually take it down to the minimum 500, right? You would need either a AUS approval or manual underwriting, obviously. 7.5% is our lowest cost option at par, and you can buy that down all the way to 6.375 for your 500 credit score, 100% LTV USDA purchase. Now here is our USDA renovation purchase, also 100% LTV. This is a great program, very similar to the 203K FHA renovation loan program, right? Where you can finance the renovations along with the property purchase. So you can either use this program to buy a property that has condition related issues that won't not let it close with regular financing, or simply a property that the borrower wants to turn into their dream home after closing. They were not able to find the one in the condition they want, but they found the one that they liked, area that they liked, the distribution of the home that they liked. All they got to do is just remodel kitchen, baths, add some new windows and some paint, and you have your dream home. So this renovation purchase, lowest cost option, 6.5% at par, and you can buy that down to 5.75% as our lowest rate option. Now, furthering finding the dream home, as we all know, this option is especially sweet because this one lets you buy a piece of land and build your dream home on that piece of land. So if you cannot find it in existing inventory, then look for the land, buy the land with the loan, and also build the home with the loan, and then have this loan transition to your permanent end loan when the construction is completed. 6.75 is your lowest cost option at a quarter point, and you can buy that down to 6.25% at a cost of only 1 point, which is a great option for your one-time close construction to permanent loan at 100% LTV. Let me also make note that this product, construction loan, would also include buying the land and buying the brand new manufactured home, which when you buy it from the manufacturer, it's still considered a mobile home until they bring it to the site, usually in two pieces, put it together on the site, attach it permanently via a foundation to the land, at which point then the affidavit of a fixture is issued, which now officially transitions This mobile home that previously had a vehicle title is now transitioned to real property, where now it gets its own folio number, and you can find it in public records as real estate with property with the structure type of manufactured home. And that is the difference between a manufactured home and a mobile home. The mobile home does not have land associated with it. It'll be in what we would call a trailer park, paying lot rent. And the manufactured home does have land associated with it, which is owned by the same person that owns the structure. So now our last two options are going to be rate and term refinance options. This first option is for a standard rate and term refinance because USDA does not allow cash outs on any transaction, right? Remember, this is to foster home ownership. So in this case, we want to make sure that the borrower can keep their home. So we're refinancing them into a lower interest rate loan, right? 6.25 is actually offering a lender credit of a half a point. And you can buy that down all the way to 5.375 at a cost of 2.375 points for your standard rate and term 1 unit refinance. And our last option is our streamline refinance for USDA. Now, in order to originate the streamline refinance, it has to be currently a USDA loan. So it's USDA to USDA. And the streamline refinance, similar to the FHA streamline refinance, will not require an appraisal, will not require income verification of the borrower, nor will it require credit verification of the borrower, but you do need to be on time with your mortgage payments. So our streamline refinance here, you see the same great rates, 6.25 with a lender credit of a half a point. And you can buy that down all the way to 5.375 for this amazing USDA streamline refinance at 100%. But remember, this is a rate and term product, never any cash out on USDA. So definitely look to the mortgage calculator for all your USDA loans, agency, and non-QM as well.
Perfect. Thank you, Jose. I do not see any questions. Again, some back to the basics, but also some things that you may not have known there about the USDA loans. Like you can use it to build your own home, right? Amazing. So thank you, Jose. Don't see any questions still, so we'll go ahead and wrap it up. Remember, we do this at 11 a.m. Eastern every weekday where we go through our live rates and then do a deep dive into a different loan type. So we'll be back tomorrow with a new loan type. Appreciate everybody tuning in.